Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate and Business Podcast. Today is October 20th, 2021. And we have a great podcast for you. We're going to talk about all subjects pertaining to mortgage business, real estate, what's going on right now. We all know the market's hot, but we got to get to some certain specific topics regarding new construction, straight talk about rate talk. I am joined by one of the best mortgage loan originators in the United States, top 1% of all mortgage originators, Becky Alley. Hi, Becky.
Hey, everybody. Thank you for that very kind introduction.
Well, Becky, you hosted the Hardcore Mortgage Real Estate and Business program on 97.1 FM, heard every Saturday morning from 9 to 10. I did a great job last week. And, we talked about everything under the sun, property appraisals, all the miscellaneous things, home inspections, low inventory. But today I want to get into something that, we always talk straight. So I got to, straight talk, rate talk, up and away. That's where rates are going. All signals point to a Fed increase coming by the end of this quarter. Could be sooner. We want to tell people to lock in now. But let's just talk about what's going out on the street right now in terms of sales. There's an article that was just put up that, and I got it off of Housing Wire. So everybody knows what my reference points are: mortgage periodicals, Housing Wire magazine, everywhere from the Boston Globe to the LA Times and everywhere in between. New construction right now, Becky, is way up. It's up. Single family homes, new construction way up. The most units are under construction in the last 47 years. Since 1974, 47 years ago, we are breaking all records in new construction. You're on the street every day. You're seeing a lack of home inventory. So the question I ask you is, if somebody can find a brand new home that's under construction, put a deposit down, wait anywhere from 7 to 12 months, maybe 14 months to have it built, why wouldn't somebody just wait it out rather than buy an existing home?
I think because that's the exact point. It takes time. We're in this lack of housing inventory pandemic, right? And then you have this new construction that was such a lag with the housing lumber. I mean, buying a new house and building a new house are two different things, right? When you're building, you have to deal with everything from the ground up. Are they slapping it together? Does it have good bones? You don't know, right? Then you also have landscaping. I mean, these are all costs that come after the fact. And, yes, it's, new construction is kind of ramping up as it should be. Yes. But again, it's not really offsetting this lack of inventory, because it does take time. Like you're saying, it takes 10, 12 months for these properties to get built. And then once they're built and you've already put X amount of deposits down, then you also have to worry about the landscaping, the grass, and, that those are going to be out of your own pocket. So, new construction versus existing, in my opinion, is going to be a lot more costly, let alone, like you said, in 12 months from now, you don't know what the rates are going to be, right? So now you're talking about, there's just a lot of moving parts when it comes to a new construction versus existing, in my opinion.
Hi, Lisa Lawson. We're also joined by Lisa Lawson, the also nicknamed Google of our office. Lisa, good morning.
I know what I'm going to dress up for Halloween. I'm going to try to figure out how to be Google.
There you go. Yeah, I would imagine they do have kind of like a screenshot Google where you could like put it around you and do that. I know that Becky Alley has some ideas what she wants to dress up as. Maybe you and Becky get together and she'll tell you how to dress up as Google, maybe. But ladies,
oh my God, goose
I'm joined by Lisa Lawson and Becky Alley, Capital Mortgage Funding, this morning, and they will also be on the Hardcore Mortgage Real Estate Business Show this Saturday morning, again, 9 to 10, 97.1 FM here in Detroit. And Lisa, Becky and I were just talking about new construction versus existing construction. The statistics came out. Most units under construction in 47 years, 1974. All my builder friends, all the builders around the country, they are anticipating a continued strong market in home sales, lack of inventory in existing sales, and that's why new construction is at a 47-year high. Pros and cons of buying new construction versus existing. Becky Alley laid it out: time, rates, and cost. What do you think?
I mean, I built new construction. In fact, you know, always we talk about not having a crystal ball. I built my house and closed at the end of 2006, and then the market crashed. So obviously, as loan officers, we don't have any, you know, special powers that let us know what the future is going to happen. But there's definitely way more cost involved in new construction. I heard Becky mention landscaping, you know, getting grass, but there's sprinklers. And then you have every window in your house needs a window covering. So you have to buy curtains and blinds and shutters, and it's never ending. So if you're prepared for that and realize that all those additional costs are going to happen, in addition to being subjected to a floating rate until you get close enough to within a lock period. You know, yes, there are long-term locks, but those locks are more expensive. You're not getting market rate. When like, oh, we have a new construction lock, you can lock it for 6 months. Yes, but that rate is higher because they're hedging, right? That rate's going to be higher than what the market rate is. So if you're willing to incur all those additional costs to get, you know, a new construction home, that's great. But there are amazing homes that are already built, existing homes that need great families. And sometimes those homes just need a tweak. Sometimes they just need somebody to come in. And I know Becky put a lot of TLC into her house, you know, and making it exactly what she wants. It doesn't always have to be new.
So you know, that's a great point. You say exactly what you want. And let me, you know, I like to play devil's advocate of this. So I'm going to throw this one out to Becky and Lisa too. Becky, what about the people that say, you know, new construction? Yeah, I realize I have to wait. I realize rates are going up. I realize it might cost me a little more, but you know something, Becky Ellie, I can do it and get it the way I want. What do you say about that? And I have an answer to that, but I want to hear what you have to say.
I mean, I agree with that. I mean, you can't really argue, because who are you to put a price point on what someone wants? You know, if you really want it and you're going to get it, you can customize it specific to you, then okay. And the other element of that is that the inventory that we keep speaking about, right? There's nowhere for these people to go in essence. And so they've gotten frustrated with being outbid. So they say, screw it. I'm just going to build, and I'm going to build where I want and how I want. And I'm going to sit in my existing house for the next 12 months and roll the dice there, because if I'm going to overpay for someone else's house, I might as well overpay for a house that I'm building. Right. So, you know, those are the elements that most people, I would assume, are considering, you know, when they're getting frustrated, trying to look for the existing house with good bones. They're, you know, at this point, they're just trying to roll the dice, you know, assuming that the builder's going to give them a house with the great bones that they're looking for.
Yeah. Hey, Lisa, I've got an answer too. It goes like this. And remember, everything's all situational. This all pertains to people's individuals' wants and needs, and then their capability to go ahead and be able to afford either new construction or rehabbing existing house or just moving to a different property. My feeling is this: if you're in a situation where you have an existing home, you're thinking about either new construction, what about either adding on to your existing home? What about redoing your existing home and putting the money into that house? Now, you might not get the money out, but I guarantee you whatever improvement, Lisa, you're going to do to your existing house will cost a lot less than new construction, as Becky pointed out. And you can kind of make your existing home at less cost into a brand new home anyways, right?
Yeah, I totally agree. And that's kind of what I was alluding when Becky pretty much redid her house, right? That's what you did, Beck.
Mm-hmm.
I mean, she pretty much found an existing bones and said, this is close to what I want, but not exactly what I want. And she made it exactly what she wanted.
It's pretty sweet. It's pretty sweet, actually. It's really cool. What Becky did to her house is really, people should, I know she's taking pictures of it and sent it out and whatever, and I don't want to get too personal, Becky, but what you did to your house is just beautiful. You really did.
Yeah, I totally agree. So, but that's what I'm saying. It doesn't always have to be new construction. Now, in my case, we had previously lived in a condo. We couldn't find a place, so we built. And this was the way back in 2006. So we didn't have a home. It wasn't like we could make where we lived what we wanted. So for us, that was the solution. But I definitely think that, you know, especially if you love the area that you live in and your kids are in the right schools, you know, there's a million other things that play into this. And that's why we say every situation is unique. Every person's situation is different. You don't always have to move. You can add on, add square footage, finish a basement, you know, change the layout, and it might make it better for you, and you can stay put where you're at.
So what the pandemic has done, ladies, it's made people reevaluate, you know, because you can work from home, work remotely, you can, you know, a lot of situations, again, A lot of situations are allowing people to go ahead and work wherever they live, and then you can live wherever you want. So what has happened during the pandemic, second home and vacation home sales are up 60% pre-pandemic. Okay. So what that means is they took a look at the pandemic. They were allowed to go ahead, work from wherever they want. People bought either a second home or a vacation home or whatever they did. If they lived in Michigan, people bought in Florida or other places. Of course, I'm just giving an example. The I-75 corridor here in Michigan, and they had a home in Michigan. They had another home somewhere else, or somebody just moved to Florida. But second home and vacation home sales are up, and that's because of the pandemic. And I believe you're going to see that trend continue. Becky, what do you do? You do a lot of vacation homes. You do a lot of vacation properties for people. Again, Becky, Lisa, here at Capital Mortgage Funding, we're on the street. What are you hearing and what are you seeing?
That is an undeniable fact. I mean, based off of, personal conversations, people in my life, the clients that we're seeing. It's also on a list of, checkpoints of accomplishments that I want to do in my life is own that second home. For that, like for multiple reasons, but, I feel like most of the time, families want to have that other place to go to have those summers, those lasting memories with their children, pass that from generations to generation, right? And I feel like the generation before us, so like say my grandparents, like they've had, other homes, and I feel like it got lost a little bit with like my parents' generation. Right. And then I feel like, like now my generation are trying to pick that up a little bit. Right. I might be making that up. I might be projecting. I don't know. But needless to say, it definitely is true, because now with this COVID-19, like you said, it's opened up everyone's minds as far as, do I love where I live currently? Can I check all the boxes? The good thing about Michigan is you actually could be living in your current primary home and be on the water at the same time. You don't necessarily need to have a second home to be on the water. But if you're not in that particular city, Michigan kind of gives you that broad spectrum where you can check all the boxes. The sky is the limit. And if you're in a position financially where you can, tap into a beautiful dream of yours, why not? The rates have been never this low. On a second home, you don't have to put 20% down. You put as little as 10% down, and you're investing in your dynasty, if you will, of your family. And I feel like that's became a huge point, even with my friends. A lot of them are looking at that second home on the water, hour, 2 hours, 3 hours away, just so they have a place to make memories.
Yep. I agree with that. That's exactly what you do. You go there, you go on the weekends, especially up north here in Michigan. The summers are beautiful. If you ski, hunt, snowboard, fish, ice fish here in the wintertime, it's great. And that's where you are making those memories. And they're everlasting, long lasting, lifetime memories. And Lisa, I used to go up north every summer. Kids were young, used to go up north. We used to play a lot of golf. We used to do a lot of outdoor activities up there. I never owned a home, but I got to tell you, as I get on in age, like you, Becky, although I'm a little older than you, I'm looking to maybe have a second home somewhere else as well. I am not giving up my first home here in Michigan. I love it here. I do not see moving, but been in my house 29 years, not going anywhere, doing a massive rehab project to my house too as we speak. I haven't even seen my real bathroom in God knows how long, but that's a different story for a different time. different show on that one. But Lisa, you did, and we've all, and you've lived in your house now, it's been 15 years. Most people that we say, the average person is now staying in a home under 7 years. So people are moving. I don't know. I'm not down, Lisa, with the whole moving process. And this is what we do every day. We help people move. We help people go ahead and get into the home that they want to be in and raise their family in. We love it. But, it's like the shoemaker's kids, right? Shoemaker's kids didn't have any shoes because they were too busy working on their, everybody else's shoes. So I'm not a mover. You're not a mover. Becky's been in her house for a while and she's shaking her head. So
I was in my first house for 15 years. It's supposed to be the 5-year house. And I was in there for 15. I'm not a mover either.
Right. It's rough. And I was talking to somebody on the phone, and this brings real life circumstances into it. Somebody said to me, and Lisa, I'm going to throw this one to you. They said, if somebody came in, there's such a lack of inventory, Harry. If somebody, Lisa Lawson and Becky Alley, Lisa came and knocked on my door and gave me, just say, the number that I'd be looking for, Harry, what do you think about that? And I said, yeah, but where are you going to move?
It just happened. There was a note on my door last week saying, we love your home. If you're ever interested in moving, please contact us. We'd love to purchase it. And I mean, it's very nice. And I appreciate that, because we put a lot of work and great landscaping, and we have amazing, what I like to call the party patio in back, with 2 levels. And, we've done a lot of work to it. We have a really big yard, but there is no way that I could probably ever find something comparable that I would want to move to. I've worked really hard to make my house a home. And I don't think that I would be able to find anything, especially within time constraints. And my close friend just went through this. She initially listed her house on the market, got a cash offer, realized she has to stay within her school district, realized that wasn't going to work for her. She couldn't find anything. So she had to actually rescind. They took the house back off the market. She had apologies, and she spent months trying to find a place to move. It's not that easy at the moment with this inventory shortage, not like it used to be. You definitely have to have a game plan, and make sure that you've got a place to go.
Yeah. And that number would have to be a really big number, because there's something called a quality of life issue. Okay, where are you going to go? You're not going to find the house. And the person just texted me. Obviously, they're listening to the podcast. They said, "Are you talking about me?" Yes, I'm talking about you, because really, where are you going to go? Okay, now you could say, I mean, what's the number? What's it worth? So you're going to move to an apartment. What are you going to do with all your stuff? It's going to be a hassle. Yeah, Becky and Lisa shaking their heads. You got to really have a game plan. You got to plan for that. So, everybody, again, it's all situational. Everybody has their own individual situation. But, there really isn't a lot of inventory on the market right now to pick from. So, therefore, if you assess your own situation and you say to yourself, sometimes it's better to stay where I'm at and not make the move. Sometimes the best moves you make are the ones you never make. So there's that. Let's talk about straight talk, rate talk, ladies. Straight talk, rate talk, up and away. All signals point to the Fed increasing rates sooner rather than later. We are looking at mortgage interest rates. They are incredibly low. Don't look myopically right now, everybody. Don't look just right now. Look long term. Where have rates been and where are rates going? And then apply that philosophy to what is your situation right now. If you have not locked into a rate right now, you're missing out. If you haven't refinanced, what are you waiting for? Next year, it's going to be too late. You need to do it now. You need to get it done before the end of January. You need to start now, so we could close you in November, December, January. The longer you wait, you're going to miss this opportunity because rates are going to go up. Becky, have I said that enough times in all the years that you've known me, worked side by side with me, late in the night on texts and emails? We talk about people are just wasting money, but now is the benchmark time, because we know rates are going up.
I mean, listen, if you said it once, you said it 1,000 times, but it's never going to be enough, right? Because each time one person might hear you, right? So if that one person that hears you each time you're saying it, that's all that really matters. And the truth is, that's the truth. And I mean, you're talking, it's went up 20 basis points over the last month. So what does that equate to? It's about a quarter, right? It went from 3% to 3.25%, the national average. So is that still great? Yes. Is it comparable to where it was last year? Yes. Right. But, in a year from now, are we going to be looking at 3.5, pushing close to 4? Yes. Were the rates 4.875 in 2018? Yes. Okay. So people are still going to buy houses and still going to refinance, even when the rates are higher. The point that we're trying to make is that this is inevitable. It's an ebb and flow cycle. We know it's going to happen. It happens. And here we are. We're nearing the end of the lowest points that we have ever seen. And we want you just to take advantage of it, because if it makes sense, if it made sense at 3% and you missed out, okay, well, then it's still probably going to make sense at 3.25%. We don't want you to miss out, because 3.5 might not make as much sense to you, right? So we're in this market where your home values have been appreciating, which is a beautiful thing. Okay. COVID-19, the dark horse in driving these rates down. But the fact is, it was artificially deflated because of these outside elements that are going to be coming to an end. And the point is that right now the money is cheap. So if you are not loving where you live and you don't want to get into the buyer's pool, then you possibly want to entertain a cash out refinance, get the money as cheap as possible. It's still cheaper than if you did a home equity line of credit to make your home exactly what you want it to be. And therefore you don't have to worry about moving. Like Lisa said, Lisa's home is, she's not lying. It is phenomenal, gorgeous. She's got another house she just added when she finished her basement. It's like a house on the top of a house on top of a house, right? It's like sprawling, beautiful, gorgeous. We have an amazing contractor, but you're right. She is not going to find something out there that is going to be even close comparable to what she has made for herself. So why would she do that? Right. So the same might be speaking for you. So if you are entertaining it, the rates are going to go up. That is a fact. And we just want you to take advantage of it, because why not? Why be that looky loo when you're like, dang it, I wish I would have. Okay, well, we would have too. So here we are telling you, don't be I wish I would have, right?
Yeah, I love it. Lisa?
Yeah, how many times do we get calls from someone, they're like, oh, I thought the rates were lower. Yeah, they were 6 months ago, or they were 4 months ago. And we're constantly sending emails out and advertising. It may not make sense for you. Maybe you were one of the few that got into an extremely low rate, over a year ago, and we can't save you any money. That's okay, but make the call and find out for sure. Often too, shortening your term. So some people have a slightly higher rate. We can get them into a 20-year. I love doing 20 years because it's not quite the same ouch as a 15-year when you shorten that term, or even a 15-year. And the rate, I just had one the other day where the payment was $54 more a month, and they're like, that's it. I'm like, that's it. But you're taking, in this case, 9 years off your mortgage and only been in it a year. And so make the calls. Let's see if it makes sense. And like I said, we're going to be honest with you. If it doesn't make sense, we're going to be the first ones to say, you know what, this doesn't make sense. You're already at a great rate, or the cost isn't going to be recouped in a reasonable amount of time if you're planning on moving in 2 years. But have the conversation. So I know that you've checked that off your to-do list and you did the best for you, your family, your home, everything else.
Yeah. So I just want to chime on something real quick. We are so passionate about what we do. We're not doing it because we have to do it. We are all very passionate. I know I'm probably speaking for everyone. We feel that we would be genuinely screwing somebody over if we were not delivering this information. We want you to save money, not because it's benefiting us, because we find guilty pleasure in seeing that benefit that we give other people. I find a guilty pleasure. I do it to be selfish, to see that look on someone's face when they bought their first home or their second home. It is such a fulfillment for me. And I feel that if you don't save the money, and if you don't try to make that decision to get into that home ownership and check that goal box, that I'm genuinely would be screwing you over by not giving you the information that I've been bestowed upon me and everyone in Capital Mortgage Funding. Just share that with you. And I just wanted to bust it out there.
Yeah, I tell people all the time, Becky, money saved is money saved. If you saw a $50 bill sitting on the sidewalk, you wouldn't leave it there. You wouldn't be like, I don't need that right now. You pick it up. It's money. It's cash in your pocket. So, whatever the reason and whatever your amount is that you think you need to save, it is still money saved. Why spend money on interest when you can spend it on yourself, your loved ones, your family? Maybe you guys want to take a great vacation. Maybe you haven't saved enough for retirement. There's so much better things to do with your hard-earned money than to, no offense, and I know I'm in the business, but to spend it on mortgage interest. That's just silly.
Hey, ladies, straight talk, rate talk, checking all the boxes, giving the answers to the test. You guys are pros at it. That's what you do. That's what we do. And Becky, like you said, we want to be the hero. We want to save people money. We want to get them into the right program. We want to put them in that house. So are we selfishly motivated to do the right thing? It's not even a question. That's what we do. Miscellaneous, ladies and gentlemen. Here we go, everybody. We have Roberto in the booth. This podcast, Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, equal housing lender, NMLS number 2289. That's our compliance talk. It is produced and directed by the great Roberto Beauchene. He is the man behind the curtain, the great and powerful Wizard of Oz, as we like to say. Miscellaneous wrap up, just some housekeeping items. Not seeing inventory, ladies. I'll give you the last word on inventory and property values. We'll have to end the podcast there. So, Becky, I'm not seeing any relief on inventory.
No, I mean, as quickly as it's coming on, it is going to continue to come off the market because there is going to be a continued influx of buyers versus sellers. But the reality is that it is going to change a little bit as these rates change, right? So, a lot of buyers are taking advantage of the buying power that a lower rate is able to give them. But when rates are ticking up, they're not going to be able to overpay for where these price points have gone. So that's something that is a fact. New construction also, that is becoming more prevalent, as we know, but it takes time. So that by the time they're building these homes, it's not enough to offset this inventory. So we're going to continue to see this, I think, throughout, 2022 for the most part. But it doesn't matter if you need to move. Some people want to move, some people have to move. And it is just the ebb and flow of what we do for a living. So, but it all starts with a conversation. So here we are, we're available all the time, and let's have that conversation to see if it makes sense for you.
I love it. Lisa Lawson.
Yeah, it's all about education, and the only way you can get the education and the correct information is to have that conversation. It might not be the right time, it might be the perfect time, but you're not going to know until you pick up the phone and call somebody and get the correct information, not the stuff that you maybe saw online or somebody told you from last year. This information and the way the markets work are constantly changing. So just do yourself a favor, pick up the phone, call Becky, call myself. If we're not available, call John, call Harvey, call somebody here, get the correct information so we can get you on the right path to either improving your home ownership situation or even getting into your first home. We're happy to help.
Excellent. Ladies and gentlemen, Becky Alley is going to have Lisa Lawson on the show, 97.1 FM, this Saturday morning from 9 to 10. Lisa, who are you bringing on the show this weekend?
Matt Bush, Remax First.
Okay, Matt Bush, excellent guest for the show.
Yes.
Always informative, always educational, which is what we like to bring. Again, he's a straight talker. He's not going to, there's no fluff in what we do. This is Detroit. We're hardworking. We just want people to save some money. Becky Alley is going to be in the chair this Saturday morning from 9 to 10, hosting the Hardcore Mortgage Real Estate Business Show. Harvey Freed is under the weather and he can't talk. Some people would say that would be good. I say it's not so good, but anyways, we appreciate you, ladies. We appreciate you as always. Roberto Beauchene in the booth. We appreciate you, my man, as well. And this has been a latest edition, Wednesday, October 20th, 2021, Hardcore Mortgage Real Estate and Business Podcast. We'll see you soon.